a few little tips that we can use for the Forex challenge that's going on. So if anyone knows, GC is actually hosting a Forex challenge. And let me know in the chat with a one if you guys knew about that. If not, drop a two. No worries. We'll be covering a little bit about that too. So you guys can kind of get going with the trading side of things as well. One, two, I see a couple twos, a couple ones. Cool. So the idea of today's call is for some of you guys who missed yesterday, or actually, Monday's first call for the Forex challenge, to kind of go over a few things that you can use both in Forex trading in general, some tips you can use, and some tips you can use during the challenge that can help you get underway if you haven't actually ever traded Forex before. This would be actually a good opportunity to get involved on the trading side of things. And obviously there are a few things that can kind of that you should keep in mind during this challenge. And I'm just going to share my screen quickly right about here. Cool. So if you guys see on my screen, this is the challenge I'm talking about. And let me just let a few more people in. Okay, let me move you guys here. All right, so the trading challenge, it's a 4-week challenge, and a lot of people have already got involved. It actually started on Monday. It is a Forex challenge, and there are some rewards like winning 2 iPads, along with getting the experience to actually start trading with some of the experts, leveraging some alerts and signals, and really getting involved within the Forex market. So my goal today was to kind of drop down a few tips for you guys, not only just for this challenge, but also in general for Forex that you guys can use to actually elevate your game of trading within the foreign exchange market. So with that being said, I suggest having a notepad and pen out for you guys to take notes. If not, I believe this will be recorded, so that's also another option. But I do suggest taking notes because it helps you kind of keep things in mind. With that being said, let me just stop sharing the screen and let's go. So there are a few things that you guys can keep in mind during this challenge and during trading Forex in general. There are 7 points that I would like to highlight throughout this challenge that you can use. Now, for anyone who hasn't traded Forex before, one of the most important concepts within the foreign exchange market is managing your lot size, right? Now, when it comes to lot size, it's basically how much you're leveraging within the market in terms of money that you would be either risking for a reward and profits or for a potential loss, right? So how much you're managing your balance, and that has to do with the lot size. Now, there are different lot sizes within trading Forex, and the idea is to be consistent with those lot sizes, right? Now, when we're talking lot sizes, they start as low as 0.01 and they can go as high as like 10 or even more. So, so when we're talking about, a low lot size, let's say 0.01, that is generally a good lot size to use when you have a smaller account. Let's say you have a $100 Forex account and you're like, okay, I'm ready with my first ever Forex account. I want to start trading. How should I risk, right? And it'll all come down to the lot size that you pick for each trade that you enter. Now, the idea is to stay consistent with these lot sizes. And what I mean by that is there are certain assets that are available, such as currency assets. Then there are commodity assets, and then there are crypto assets, right? So your currency exchange assets include currency pairs such as the euro, US dollar. Your commodities can be gold, oil, and then your cryptocurrencies can be Bitcoin, Ethereum, and so on. Now, when you're trading within the Forex market, is generally common to trade commodities and the exchange pairs, right? And the lot sizes that you pick for these different assets really comes down to determining how well you're performing in these markets. So when it comes to, let's say, a currency exchange pair, and let's say you're starting with a $100 account, it is generally a good idea to have a lot size of between 0.01 and 0.03. Now, what that means is you're actually leveraging a certain amount of your account for potentially winning a trade. Or if you lose, then you're potentially going to lose some money from your original balance, right? Now, when it comes to the currency exchange pairs, I generally, on a $100 account, I would consider anywhere between 0.01 and 0.03 a safe lot size to use. When it comes to commodities, for example, gold, on a $100 account, I would say 0.02, 0.01 would be safer bets. And when it comes to indices such as the NASDAQ and the Dow Jones, on a $100 account, it's safe to just go with a single 0.01 lot size. Now, the reason being is because based on the asset, they actually change the value of your account based on the movement within these assets, right? So if the asset goes in the opposite direction, you don't want to be losing a lot of money for the trade that you put in, right? So if you went for a really high lot size on indices such as the NASDAQ, then you would potentially end your account with zero balance, right? So we want to avoid that. And that's why it's really important to pick the right lot sizes. Now, a way to kind of determine this is by using a website that that is called Cashback Forex. I'm going to share my screen quickly again so you guys can see what I'm talking about. So over here, you can see this is the Forex profit calculator, right? Now, let's say you want to enter Euro USD. You want to enter for a buy. Let's say the opening price was 1.08 and your take profit was at, let's just add a few zeros. And then let's say your take profit was at 1.08500. And let's say your lot size was 0.01. Right now, when you calculate that, that will give you a profit of $5 on a 0.01 lot size, which is pretty decent for a $100 account. But let's say you had a stop loss of 1.0750. In that case, you'd be actually losing $5 from your account, right? Now, it's important to know how much you're losing because that's going to determine how well you perform in the Forex market, right? And that really comes down to the lots or the lot size that I was talking about. In other words, it's also called the trade size. Now, if you went for a higher lot size, for example, let's say you went 0.1, or let's say you made a mistake and you put 0.1, that can completely change the output of your trade result. So on the good side, let's say it hit TP and you got lucky, you probably made $50 on a $100 account, but that is a very dangerous trade to take because if it did end up hitting your stop loss, which was set at 1.075 and you went for a buy, then there you go. That's half of your account gone, right? So it's really important to manage your lot sizes, and this website can really help you manage your lot sizes and see what the potential result is. And you can know how much exactly you would be losing if the trade goes in the wrong direction, right? It's not only about knowing how much you're going to win. It's also important to know how much you're going to lose. Now, let's switch to gold, for example. So I'm going to type in XAU USD and let's go for the US dollar one. And let's say we started at 1945 and we closed at 1950. And that's a big lot size. Let's say it was a lot size of 1, right? Then you're actually making $5. But if you went for a higher trade size and you ended up hitting the stop loss, which let's say was 1940, again, you'd be losing money, right? Now, the same thing applies to NASDAQ, which is also called US 100. Same idea applies. In this case, let's say we go 0.01. And let's say we have our take profit at 15,500. Oops, missed the 0. Again, you're making $5 here, right? But let's say you went for a 0.5 lot size, you're making a lot of money. But if you hit the stop loss at 14,500, for example, that's $250 gone. You probably won't even reach that on a $100 account because your account would be past 0 even before that happens. So it's really important to play around with these and know the right lot sizes to use for different types of, in this case, called instruments or assets that you're using. And before you enter a trade, and if you're a beginner, I highly suggest using this to know exactly how much you're going to win or how much you're going to lose, right? And the idea is very simple, and I can show an example from a trade. Let me just pull up one of the trades that we have. Okay, so gonna share my screen again. Okay. All right, so let's say over here we have, let's check the gold buy signal. So this was a gold buy signal that was sent out last week, and the entry price was 1962. So we're gonna first of all switch this to, I can split this into 2 parts. All right, so first of all, we're gonna switch this into XAUUSD because that's the signal for gold, which is right here. And then it says buy, right? So we're gonna change, or this by default is buy. And we know the entry is 1962. So we're gonna type exactly what's written here, 1962. And we know the take profit is 1964, right? And then let's say we went for the trade size of 1. In that scenario, we'll be making $2, right? And what goes in this last little section here, this text box here, is your take profits, right? So if you had a higher take profit, for example, 1972, in that scenario, you'll be making $10. And then the same thing can be replaced with the stop loss, which is on the right-hand side. It says 1960 over here, right? So you can put the 1960 stop loss here to see if the trade went in the wrong direction, how much you would be losing for that specific trade, right? And then the same thing applies to any other type of signal that you see. You select the instrument, you click on buy or sell depending on the signal, and then you play around with the lot size, and then your opening price is the entry. Your close price is either the stop loss or one of the take profits to see what you're going to make or how much you're going to lose on a trade, right? And the idea is to risk anywhere between 1 to 5% on a single trade, right? So if you're losing, let's say you're going to potentially lose a trade on a $100 account, you should not be losing more than $5, for example, on one trade, right? So that's the idea behind calculating the profit and seeing potential losses and how we can use that to perform better in the Forex market. So I'm going to drop the link to this website in the chat below. and you guys can save that. You guys can save that for future reference and use that for any trade that you take. Now, coming back to the next few points. Now, the idea within trading in general, and even in Forex, is you should focus more on the percentage growth per day than the amount of money that your account may be increasing or decreasing, right? So that's my second point. Focus on percentage growth over like value growth, right? So what that means is you want to focus on a growth of, let's say, 5 to 8%, or 3 to 8% per day, than increasing your account by $20, for example, right? So if you're on a $100 account, you should focus more on growing a percentage of your account than growing in value of your account. And that's important because as your account grows from 100 to, let's say, $500, then it wouldn't make much sense to keep on growing your account by a fixed value, right? It makes more sense to grow your account by a fixed percentage, because in that scenario, your account growth would change, or your goal for your account growth would change based on the current value of your account, right? So again, on a $100 account, if you grow, let's say 5%, you're up to 105, and then you probably want to grow 5% on top of 105 instead of 100 again. So that's the idea. And it really helps you scale your growth more than being on a fixed kind of number that you'd be growing for every single trade. So that's something to keep in mind when you're focusing on growth. Now, the same thing applies on losses. You shouldn't generally be like, okay, if I'm losing 20 bucks, I'm done for the day. But more so, like, let's say if your account is down 5%, then I'm like, okay, you know what? My account is down 5% from the beginning of the day. Then I'm gonna call it a day, come back tomorrow, and then aim for my 5 to 8% growth again the next day. So 2 points so far. First point is manage lot size, be consistent with it. Second point is focus on the percentage growth per day over the value growth per day. Now, the third point is dividing your lot sizes, right? So now it comes back to how to use lot sizes in this scenario. Now, when you're dividing lot sizes, it is, again, important because you want to risk accordingly and not risk too much, right? So we can, let me just share my screen again right here. Okay, so over here you can see again. Now, what I mean by lot sizes is different lot sizes is you can have one lot or one part of a lot for take profit 1, one for take profit 2, one for take profit 3, and so on, right? Now, remember what I said, on a $100 account, you should probably have a max of 0.03 lot size, right? Now, if you're doing a 0.03 lot size on gold, one of the 0.01 lot sizes would go for TP1, the other would go for TP2, and the other for TP3. So you got 3 0.01 lot sizes, which means 3 entries for the specific trade, 1 for each take profit. And that really helps in kind of achieving bigger targets within a specific trade. But if you're starting out as a first-time trader, I suggest just aiming for TP1, which means you would just have a single lot of 0.01 on a $100 account, right? So you'd go for just TP1 and you would just have a single lot. But if you're a much more experienced trader or you have a bigger account, then you can aim for some of these bigger TPs by dividing your lots into either 3, 4, or potentially 5 if you have a much bigger account. But the idea is still to risk appropriately, right? You shouldn't be having 5 0.01 lot sizes on a $100 account, because if you hit stop loss, then all 5 of those hit stop loss, right? So again, depending on the size of your account and your risk management strategy, it is important to divide your lots accordingly. So that's point 3. The fourth point is, how long is an alert or a signal valid, right? So a lot of you guys have probably seen a bunch of these signals come in. And you've probably been wondering, like, how do I put in these signals? How do I kind of make use of these signals? And how long are these signals valid for, right? So a signal is valid as long as the first take profit has not been hit. So let's say you have a buy signal and the first take profit is at a certain value. If the take profit has not been hit and the value of that asset is close to entry, then that signal is still valid. You can still enter for that trade. But as soon as a TP gets hit, that trade, in my opinion, is no longer valid. You should probably wait for another trade and then enter based on the new signal. So that's something you should keep in mind during the challenge or during trading Forex in general. And the final point, which is point 5, is managing your trade, right? So let's say you are in profits within a specific trade. Now, when it comes to managing trade, it is important to know and learn when to secure your profits and when to not secure your profits, right? So the general idea that I like to follow is I want to wait for take profit 1 to be hit. And after take profit 1 gets hit, I want to move my stop losses for my other lots to entry. Now, what that means is if I have 3 lots for a specific trade, right? 1 lot has hit take profit. If I move my remaining 2 lots to entry, then I'm going risk-free, right? That means that my other 2 lots can never hit stop loss. They're going to hit entry, and then I'm going to be stopped out, right? Which means that from my first lot, I got my profits, and from my second 2 lots, second and third lot, I just broke even. So that's the idea of moving the stop loss to entry. Whenever some of these signals say move stop loss to entry after TP1, that's what it means. As soon as one TP hits, you move the remaining lots to, move the stop loss of the remaining lots to entry. That means you're running risk-free. So those are some of the tips that I wanted to share today. Hopefully it was some value to you guys and something that you can use during this challenge, which will be going on for the next 3.5 weeks. Hopefully some of you guys can make use of it, make use of the signals, and continue using some of these tips even after the challenge. But with that being said, I think that's everything I wanted to cover. Okay, so we have a few questions. Let me see. Okay. How would you maximize your profits and minimize the loss? So some of the points that I talked about, such as managing your lot size, right? Choosing the right lot sizes for different instruments or different assets. That is a very important factor in how your account is going to grow. So you should keep that in mind. The other idea is to focus on percentage growth over value growth. And if you're a conservative trader, one of the good practices is to move your stop loss to entry once one of your targets have been reached, which means you're moving risk-free. Which means you're trading risk-free, and that is another way you can potentially maximize your profits. Because sometimes what happens is some of your trades may hit TP1 and then it'll go back and hit stop loss on the remaining lots, right? That doesn't mean the trade went in the wrong direction necessarily. It just means that it did make its initial target, but then the market jumped back up, right? So to prevent that and being conservative about that, you can simply move your stop losses to entry for the remaining loss once one of your targets have been reached. What is this challenge? Yeah, so the challenge is pretty much, I'm going to pull up the screen again. Just give me a second. Okay. So you guys should be seeing. So it is a trading challenge hosted by GC. It's a 4-week challenge, and there's going to be 2 calls a week. One is a analysis call and one is a Q&A call. I believe it's on Mondays and Fridays, if I'm not wrong. And these calls are going to be happening twice a week for the next 3.5 weeks. And the best performers from this challenge would be getting into a potential draw of winning 2 iPads. But that's just an additional incentive to kind of get into trading again in the Forex market and to start off a fresh account and see if you can grow your account. And there's some tips to potentially win the challenge. A lot of it kind of covers what I talked about risk management, how to get the highest return on investment. There would also be assessing your trading volume. So that's the general idea on the challenge. There is a group that is available for more information, and I'll actually drop a link to the group in Champions University once we end this call, so you guys can join in and get more information if you guys are interested in the challenge. But the tips that I shared today is you can use that both within this challenge and out of the challenge as well if you want to trade Forex. But I do suggest taking part in the challenge because it will really kind of help you kickstart your Forex account if you haven't already. So that's definitely something to look for. Okay. How can others join the challenge? You pretty much have to kind of follow the step. I believe a lot of our members in Canada are partnered with TO Markets. So if you have already an account set up with TO Markets, you just simply can continue trading on it. But if you don't, then you should set up an account for TO Markets unless you're in the United States, because TO Markets does not support, is not supported in the United States. In that case, you can just use your existing broker. But yeah, it's just these 4 simple steps that you have to follow, and we'll pretty much choose the winners based on these 4 kind of criteria. Do you need a broker to trade? Yes, you do. So again, for this specific challenge, the broker that we're using is TO Markets. But if you want to still trade without being in this challenge, you can choose whatever broker that you like for trading Forex. But I believe that's all the questions. So if there's no other questions, is there a way to double tap buy sell? Oh, that's actually a good question. I don't think there is a way to double tap. The best way is to kind of set up one lot and then click on the same trade again. And then there's an option for trade. So you can kind of do it quickly rather than going back and then selecting the asset again. If you're already in a trade with one lot, you can just click on that trade again. And then there's an option for clicking trade. And that will open up another lot for you where you can quickly set up the second take profit if you'd like. But yeah, that's pretty much all there is to it. Again, I'll be dropping the link to this channel. And it also has a couple recordings that you guys may want to watch if you guys want to know more about the challenge and how everything kind of works. But hopefully this was of value to you guys. And yeah, hope you guys have a great day, and I'll catch you guys later. Peace.